Every trader loves profits, but eventually everyone faces something much harder. The trader experiences both profits and drawdowns, two sides of the same coin in every trading journey. Drawdowns don't destroy traders, bad reactions to drawdowns do. Now let's explore the professional approach that separates winners from those who crack under pressure. Scaling safely when you're winning equals surviving calmly when you're losing. Both are essential. Welcome to Money Mastery, your guide to financial freedom and wealth creation. The most important skill in trading is learning how to grow without blowing up. No hype, no shortcuts, only professional rules. That's the path to real success. Let's explore two critical concepts that separate professional traders from amateurs: scaling and drawdown. Scaling means increasing your position size only after your system proves itself, while drawdown is simply a temporary drop in your capital. Here's the truth. Drawdown is normal, but blowing up your account is optional. Now let's look at why most traders fail when handling these concepts. Most traders make two dangerous mistakes. They increase size after one win or try to recover losses by trading larger. These aren't scaling strategies. They're the foundation of professional money management. Before scaling, you need consistency. At least 20 to 30 trades using the same strategy with positive results. One lucky week means nothing, but consistency means everything. Never jump from 1 lot to 5 lots. Instead, scale gradually from 1 to 2 to 3 lots. Your nervous system must scale with your capital, adapting gradually to larger positions. Increase size only after your capital grows by a fixed percentage, and never pre-decide future position sizes. Capital decides size, not ego. Professional traders think differently about position sizing. They focus on risk, not lots. Risk-based thinking means using a fixed risk percentage per trade, maintaining consistent risk even after scaling, and applying the same stop-loss logic. If risk is controlled, size becomes safe. So what makes a drawdown healthy versus problematic? A healthy drawdown happens within your system limits, doesn't break your rules, and doesn't affect your mindset. Drawdown does not mean system failure. Let's cover the rules that protect your account during losses. Set a maximum drawdown limit, and when you hit it, stop trading immediately. When protection kicks in, discipline wins. When drawdown occurs, cut your size by 50% and focus on execution, not recovery. You don't fight a storm by speeding up. Never take revenge trades, double positions, or make emotional entries during losses. Recovery requires a calm, systematic approach that protects both your capital and confidence. Trade your smallest size, follow your system strictly, focus on process, and ignore your profit and loss. Capital recovers faster than confidence, so protect both. Option selling requires special scaling considerations due to its unique risk profile. Scale only after stable weeks, avoid scaling near expiry initially. Keep a margin buffer, and never deploy your full capital. Option sellers survive because they leave room to breathe. Beyond rules and numbers, your mental framework determines your success. Scaling tests discipline, while drawdowns test character. Stay emotionally detached. No excitement after wins, no panic after losses, and no tying your identity to results. You are not your last trade. Let's see how this works in practice over a complete trading cycle. Capital grows, you scale gradually. A drawdown hits, you reduce size, follow your system, recover, and then resume scaling. This is how professionals last for years. Let's wrap up with the complete professional code. Scale slowly, reduce fast, protect capital, respect drawdowns, and trust your system. Trading isn't about making money fast. It's about not losing it permanently. If this video shifted how you see risk and growth, let us know by hitting like and commenting below. Subscribe to Money Mastery for your step-by-step guide to financial freedom and building real wealth. Next up, we're building a complete trader's playbook to take your skills to the next level. We'll cover entries, exits, risk management, psychology, and review so you have everything you need to trade like a pro. Thank you for watching, and we'll see you in the next one.